Good morning, everyone. Jesse Webb, Traders Pro. Let's take a look at current market conditions. We saw a decent little reversal yesterday. We talked about that at the pre-market had gapped higher pretty significantly and then essentially traded lower the entire rest of that day. This is a chart here of the S&P 500, or SPY is the ETF. You can see that we had this rally higher and then this black bar, still green because that our short-term trend indicator has shifted back to green, back to positive. So we could be entering a situation that is more like this versus more like this. That is, if this trend is starting to shift. We've got some, I can draw kind of a rudimentary trend line right there, but that shorter term trend is starting to get taken out. This is what we want to see in a bottoming process. From here, we can also add in some additional confirmation to that. We obviously know that we're in an ugly downtrend. We are, in terms of our indicators, this bear market has a rank of negative 19. Typically it ranges 10 or 11. Really, in normal market conditions, it's about a negative 5. So we're deeply oversold, which means we could get it says that the current conditions are extreme and risk reversal is high. What that means is that we could get a bounce here. Risk reversal, meaning reversal of the current downtrend to a potential new uptrend. Now that's not going to happen all at once, so it's going to be something that is drawn out. And in this market, we're actually seeing that kind of painfully. It's a really slow, kind of a stealth accumulation bottom right here, and so it's we'll see if we continue to build that out. Buy-sell ratio is also confirming that, where we're seeing now we're just about to equilibrium, which creates a buy-sell ratio down here. Right now it's 0.81, a buy-sell ratio of 1. Typically when we get a buy-sell ratio of 1, that's going to look like this. We get that trend shift. So then we create a new uptrend. Okay, this obviously is a downtrend. Market conditions, you approach the bias with a downtrend. How are we looking to sell the rallies? Are we looking to trade inverse ETFs or short stocks or put options? That's the mindset in this kind of condition versus this kind of condition. So we're about to switch conditions right here, or getting very close to it. Sometimes we can get kind of a little false rally, or even a shorter one. This bear market has looked like this, where we're getting these really large aggressive downturns, but any bull rallies we've seen are kind of lighter like this. So that's also an indication that we're in a pretty nice downtrend. In this case we are. It's been a full year-long bear market, and this indicator is one to be watching. So this is a pretty strong downtrend, pretty aggressively to that upside. So we may see any rallies kind of fizzle out, and we'll see if that ends up happening. Although again, the conditions are looking to shift here, so just be aware of that we're kind of on the cusp here of at least a shorter term trend reversal. And chart here on the SPY with this shorter term trend kind of ticking up. That's on the short term trend. The long term trend is shifted back to hold, so it's kind of a trendless environment, and it'll look like that during any chop that's happening here. Chop versus trend versus trend. Okay, so those clearly identifiable trends. The yellow, it starts to be stuck in the middle of a trend, kind of a trendless a corrective or counter trending process. The shorter term, though, we definitely are seeing a pop right here. So keep an eye on that. Watch. It's still relatively early. It also could be a bear market rally, which could create some head fakes. Those are some things to watch for, and we'll see how this day pans out. Have a great trading day. If you're not a premium member, go ahead and join us. I've got a link for you just below the video that you can go ahead and get started. Thanks a lot. Have a great day.